Good evening, guys, and a very warm welcome to this market outlook. Firstly, I want to say a welcome to all the new members that have joined us in the Quantum Stone Capital community. Welcome and thank you for choosing Quantum Stone Capital. To those new members, if you do have any questions regarding certain sections in the Discord, or you're unsure of something I'm talking about in this commentary, please feel free to give me a message, and it's something I can go over with you in detail and sort of fix or slash get you up to scratch with the members that have been in the group for a bit longer. But nevertheless, by watching these commentaries, by watching Technical Tuesdays, by watching the mid-market reviews, you should get the gist of things and the hang of the way we trade on a day-to-day basis, and what actually goes on from the analysis point of view. So yeah, without further ado, let's get into this market outlook. Firstly, looking at the economical calendar for this week, as we have today, Monday, 1st of February, we did have some high impact USD news. Didn't really affect the market as such, as today was quite a quiet day. And this is the reason I do the market commentaries on a Monday. So the trade ideas will be presented on a Sunday night, but the commentary will be out on a Monday. And the reasoning is, there's a couple factors involved, but the main one is, as we've seen, how news can often affect the markets, especially in market open and stuff. And for the past, I believe, 2 to 3 weeks, we've been opening up with 50 to 100 pip gaps, and that straight away can change the whole bias for the week. So I always like to see how the market opens and understand, coming into Monday's London session, Monday's New York session, how we react, and do we close the gap? Do we react accordingly and leave that gap open, which would then sort of have different biases depending on that certain scenario. But yeah, Monday's high impact news didn't really do much to a certain extent. The only pair I was looking at today was I believe it was AUD USD, but it still hasn't come to our entry yet, so I'm just holding on that and just monitoring price. Tuesday we do have some high impact news on AUD USD and NZD USD, two pairs that I am looking at closely, so we could see a very favorable opportunity tomorrow on both of these currency pairs, which I'll break down in a minute. Wednesday, no news. Thursday, we have some high impact GBP news, followed by some AUD news. So the news that happens on Tuesday could be the catalyst towards a very favorable swing trade that we can hold on to on AUD USD. It's just a matter of picking the right entry, etc., and refining it to the T. And then Friday we do have some Canadian dollar news as well as some USD news. So all in all, from the news perspective, we do have quite a lot of high impact news this week, and it does look like there is going to be some volatility in the later days of the week. But without further ado, let's get onto the charts now. So just looking at the dollar index from the monthly time frame, as we have started a new month, as it's the 1st of February 2021. So just scaling in and giving you an overview on the monthly time frame. So again, I did put this in the Discord, and there's a section called Quantum Charts. That's basically where I'm going to be posting charts from top down. So you get an overview on what I'm looking at from a monthly all the way down to a 4-hour/daily perspective. And yeah, this basically, by analyzing the higher time frames in an in-depth detail, and what I mean by that is some people just look at the monthly time frame to get an overview on biases, etc. By looking at the monthly time frames and understanding where liquidity is purged, where there's mitigations going on, understanding structure, it basically gives you a much clearer viewpoint on weeks and weeks and weeks ahead for price action. So one thing people sort of have clarity with or confusion with is having daily biases, and arguably, yes, daily biases can change from day to day, but if we know on the monthly time frame we're expecting higher prices on the dollar, it's only going to signify us to be looking for bullish trades. And the reasoning is, even if we're sort of expecting a retracement to a certain extent, the bullish trades are always going to be that much more explosive, because on the monthly time frame we are bullish. So yeah, without further ado, that's just a little small introduction on higher time frames and sort of why I analyze it. Not quite in depth, but to a good amount. Just looking at market structure previously, lower low, lower high, lower low, lower high, lower low, lower high, and arguably we failed to create that new lower low over here as this prior engineered low failed to basically get taken out. Upon doing so, we had that small retracement up, had that raid. This is not really a sort of structural low to say the least. It's more so a raid of this prior low. This prior swing low, and upon this raid, as the annotation says, that was for the screenshot, but nevertheless, failure to make a low raid of price. So as this raid's happening, what's basically going on is there's accumulation of orders. So people who have quite a large capital, they're not just trading the intraday time frames. Some people can be looking at the market from a position aspect. So you've got to consider there's 4 different types of traders: the position, swing, intraday, and scalping. If we understand that, okay, maybe position traders trade on the very high time frames in the sense that they could go as high as the yearly, there are going to be accumulative orders at the bottom of this low, and this basically it attracts 2 people. It attracts breakout traders, so they think the dollar is going to sink, and we can see with this very bearish candles, arguably a Marubozu candle which has minimal wick on each side. It did look like it was going to signify a lot lower prices on the dollar index. So it's attracted those people to go short. In going short, they've basically been trapped now as the market has reversed and never come to that point ever since. And in addition to that, people who had their stop losses below this prior swing low have now been liquidated, and those stops have now been used and paired from the bank's algorithm perspective in order to see higher prices on dollar. So yeah, that's just a small explanation of how sort of raids work. And then we've seen that not impulsive move higher, but we've had that correction, bullish correction higher, had that small retracement arguably to mitigate with something here on a smaller time frame, and then we've seen that impulsive move up. 1, 2, 3, 4, 5, 6, 7 consecutive bull candles, creating that inefficient pricing and arguably broken market structure on a monthly time frame. And then we had these engineered highs here, raid of those engineered highs similar to what we're seeing there. Liquidity gained, sell off to where these relative equal lows and broken market structure once again. A retracement back up to here. What do we do here? Take out this prior engineered high and mitigate something over here on a smaller time frame, and then we've seen that sell off. Now just explaining current PA right now. We are in a sponsor candle, the last down candle before that up move that ideally swept this prior high here, mitigated with that. So yes, I do think this candle needs mitigation, and upon a mitigation, I do think banks are going to add additional orders in. But if we just look at sort of what's happened in this scenario and compare it to this sponsor candle here, notice upon a mitigation, we've literally just had a wick in that area and then a major sell-off. And with this candle, we've had very bearish candles in the sense that we had 1, 2, 3, 4, 5, 6, arguably 6 consecutive bearish Marubozu candles. That's signifying lower prices on the dollar, and there's not been a rapid reaction on the dollar to signify higher prices. So in order for me to sustain a bullish bias on the monthly time frame, I would like to see a break above this level here, and then a possible pullback, and then and then my bias on dollar will remain long. But right now, we have formed a doji candle, which could signify a shift in market momentum. Now we could be looking for higher prices on the dollar index from a short-term perspective. And if I actually just draw on my discount and premium zone of just this sort of tool here, so this would be the premium zone, and this will be the discount. We are in discount pricing right now, so in order for me to look for that new lower low possibly, I would like to see price within this area here. So short term we are bullish on the monthly time frame. Then scaling to the weekly time frame, just get rid of this for a second. So again, we've just refined that monthly area of interest to the weekly area of interest, and notice how we had that mitigation to the T, and then ultimately sold off. But yeah, just looking at this sort of price action here leading up to that mitigation, we can see quite impulsive price action, both sweeping out the prior low and the prior high. And we have had 1, 2, 3, 4, 5, 6, 7 consecutive Marubozu candles in both the bullish and bearish direction. That signifies, a big accumulation of orders and, arguably a reversal happening. And if we actually look at price action right now here, we can see, 1, 2, 3, 4, arguably 5, about 5 to 6 doji candles. So it just shows that the market right now is in to a certain extent some consolidation, or what I like to say is contracting orders. So we're in a tight range, just moving sideways, but I would like to see some impulsive movement, especially on the bigger time frames, as after some time of contraction, we normally do see some impulsive move. So we could come to our weekly area of interest, and that'll be in line with our premium on the monthly, and then look for a ultimate sell-off to lower prices on the dollar. We do have this inefficient pricing on the weekly time frame. We have that gap, and no prior price action to the right has rebalanced that area yet. So I do feel this area is a good place to target in regards to first target, second target, third target. So this will probably be my first target. This last up candle before that down move will be my second target, but this will be my ultimate target and my third target here. And just in lining that with structure, we are making lower lows, lower highs, lower lows, lower highs, and arguably you're going to make that new lower high in order to make that new lower low, and it's still in line with weekly structure. Now just scaling into the daily time frame. I think I mentioned this in the last weekly outlook, but we are forming to a certain extent an accumulation schematic. But one thing that's sort of catching my eye is on the daily time frame, from this high to this low, we are in a premium range. So banks have now ideally got the best price possible in order to look for a sell-off on DXY. So if we take out this prior high here, my bias changes to bullish, and I look to see higher prices on the dollar. But if we react bearishly, as we sort of have, if we actually look, every time we've come into a premium range above that equilibrium 50%, we've had that sell-off. Come into a premium, we've had that sell-off. Are we going to ultimately have one more push up to this area, which we look like we're doing now, and then have that sell-off, which could actually be a catalyst towards the news events we have, as we do have USD news on Friday. But yeah, be an interesting one. So we are in a premium pricing. If we do break that, my bias will turn bullish, and I'd possibly look to get in upon a retracement. But either way, I am favoring lower price. If we just look at technicals as well and understand where liquidity is in the market currently, just looking at this prior low here. So we have relative equal lows present over here. Even this area here, we can see this prior swing low. I'd like to see them ideally get liquidated. In addition to that, we do have this sponsor candle here that needs to be mitigated. I don't feel there's been a solid mitigation of this candle yet. The last down candle before that up move, and ever since then price has been ranging. So I'd like to see one more push down, mitigate with this candle, and ideally this could be the candle that catalysts bullish price on the daily time frame towards our weekly area of interest, which is present over here, and that is in alignment with this previous sort of price action here. So again, we had that contraction movement. It looked like a accumulation schematic actually. Upon that accumulation, we've had them relative equal highs here, a stop loss hunt, and then an ultimate sell-off. And what do we have? Same thing present here, equal highs, sell-off to attract retail to sell the dollar, as they're looking at at these two highs as a double top, which is a retail pattern. We've had that sell-off and ultimately had that stop loss hunt, and then seen bearish prices ever since. So yeah, I expect a one more small sell-off back into this sort of sponsor candle here, and then higher prices on the dollar. Looking at the 4-hour time frame, it just gives me a bit more of an overview, both considering liquidity and areas of interest that we could react off. So just looking at the dollar and explaining how once we reach that daily premium level, if I just put on that daily premium level again, so once we reach that level here, I'm just considering all of these wicks here, upon reaching it within this area here, we come to this sponsor candle, we've ultimately had that sell-off, right? And then arguably created them relative equal high / double top, had a small pullback, and looked like we were gonna push through, take out that prior high, but it looked like it mitigated something on a smaller time frame. I can't really see as this is a wick, but I'm sure on a 5-minute or 1-minute time frame there is a sponsor candle there. Upon a mitigation, we've had that sell-off, and ultimately we saw the same thing here. Upon a sell-off, we've had that retracement up, wicked into that area, and then sold off again. Now, are we coming to mitigate with something again fully on this area of interest? I think so. Just considering other factors as well, such as liquidity that still remains here. We do have this retail trend line, so 0.1, 0.2, 0.3, or however you want to look at this. We could arguably even scale this as a retail trend line as well. These are, key liquidity regions in the sense that price action is never this easy, as in you draw one line on and price is magically going to move in that favored bias. I would favor a strong sell-off to take out both of these retail trend lines, and yeah, trend lines to me just are looked at as liquidity. So I understand how retail is seeing the market and where stops are possibly being placed below this low here, and that comes in alignment with that daily area of interest that we had, which is that sponsor candle, and ideally I've basically refined it onto a 4-hour time frame. So that was our daily area of interest. On a 4-hour time frame, this is the last down candle before that up move, and in confluence with this, we do have that breaking market structure there. So we had that sell-off, we had that massive bullish Marubozu candle that engulfed this prior price action here. In doing so, we've had that pullback to mitigate with that sponsor candle. We've seen higher prices ever since, but we haven't had that mitigation of that candle. So I am favoring a sweep of these prior lows here, and if we do get a clean break below this candle here, I am expecting a new lower low to be formed on the dollar. But yeah, that's the dollar on the 4-hour time frame. Now looking at EU and seeing how this corresponds. So again, we see the complete opposite, as whatever the dollar does, Euro USD does the complete opposite. Looking at the 4-hour time frame, just explaining what was the catalyst towards this move here. Again, it was that same raid we saw on the monthly time frame on the dollar index. So again, we had this prior engineered low here. Notice we just swept it to the wick, and there was a fail of a body closure, an actual candle closure below that level there. So this suggests to me it's a solid raid, and breakout traders were involved in this, and arguably it was more of an order activation than a stop loss hunt. And what I mean by an order activation is, let's say people have short resting below this low, as they think, okay, when the market reaches this low here, it's going to impulsively take out that low and create a new lower low. They'll have sort of sell stops present over here, and as the market touches that sort of region there, it activates those limits and then uses uses the liquidity, which is known as stop losses, etc., to basically see higher prices on Euro USD. So as it's attracting breakout traders in the sense of FOMO, fear of missing out, as this candle was a solid candle before it actually closed. So it looked something like that, but with a white body, attracting retail to sell and take out this prior low. In addition to that, people had limits there, sell stops, activating them and taking out all of their stop losses, so they're trapped in the market, and price hasn't really been Well, we did get a sort of pullback there, but who's going to hold their position on the opposite side of the market for 124 pips? Just don't make no sense. But yeah, Euro USD, I am sort of signifying ideally higher prices. I'd like to see a raid of this liquidity here, this trendline liquidity. In addition to that, come to this area of interest of mine, which is that last up candle before that down move, that sponsor candle. And yeah, this looks favorable in the sense that we have had a raid of this prior low here. Just looking at the sort of liquidity that has been raided, we had these relative equal lows here, a raid of that, but in raiding this, we did have that very bearish candle. We had that engulfing bullish candle to follow up that created relative equal highs that have now been swept. So yeah, I do think this area here is a good area to be looking for possible shorts. But in saying that, I would like to be part of the long that ideally reaches this area of interest in order to go short. But yeah, there's a 3 main areas that have been, or 4 rather, that have been liquidated. This prior engineered low here, these relative equal lows here slash double bottom, these relative equal highs, and this prior engineered low that had ultimately mitigated with that candle there, and to get that sell side liquidity. So just getting into a 5-minute time frame, it does look like we are forming an accumulation schematic to a certain extent, but I just want to see price build up a bit more on Euro USD. As if we actually look at market structure from a 15-minute time frame, you know, we've ultimately been in this contraction range, a very aggressive, impulsive sell-off, that ideally looked like it wants to come and mitigate something down here, which it has. But we've got to also remember we're coming close to London close, which is at 5 p.m. UK time. So I like to trade, especially EU, GU, sort of those big pairs. I like to trade it specifically in them sessions. So for example, you know, London, I'd normally trade GBP pairs, EU, just pairs that correlate with that specific session. I wouldn't be looking to take Euro USD upon London close, like it just don't make sense. So I'll be waiting for tomorrow London session, and I'll update the group in the London chat room on the Discord. But yeah, that chat room was basically made so we can all collaborate ideas. So if you're seeing something in the London session and it's worth pointing out, you know, try and keep it strictly to currency pairs that move in the London session. But regardless, if it's a favorable opportunity that you feel will move in the London session, or even leading onto New York, you know, flag it in the group, so we can sort of all analyze it together and come to a conclusion on a specific bias. But yeah, that's my bias for Euro USD. I'm predicting short-term bullishness for overall bearishness. Start on the monthly with this. So GBP USD, an interesting pair, and I do think there is a lot of movement to come with GBP USD in the near future, especially looking at the monthly time frame. So again, just looking at how prices reacted previously, we did have these relative equal lows. We had a raid of this relative equal lows, and notice how big this sort of stop hunt was. This was in itself, that's a 500 pip stop hunt. So that's definitely considered as a stop hunt. In addition to that, I do think this is also a way to attract breakout traders, as once this candle looked like that. So it was a bearish candle, and that had a full body to it, and it was attracting basically the herd to sell, and as they've basically shorted, you know, we've seen that rally up. So yeah, that's how you basically know there is still buyers trapped within this region here, or you know, they've been margin call or something like that. But always when looking at monthly rates and stuff, you're talking about sort of position and swing aspect of it, and even, you know, funds, like they're just people who've got a bigger capital than anyone else in the market, and you know, they've still got their own strategy, their own methodology on how they look at the market. And some funds still have a retail mindset when it comes to sort of trading, etc. So they get into this habit of trading breakouts, wedges, trend lines. Obviously, it's not a good habit to sort of be in, but yeah, it's just basically people will be looking at the monthly time frame. Apart from sort of us retail traders get an overview on where GBP USD is looking to go for the next couple months / years, would be position traders and arguably you know, big funds, as they would like to keep their position running for the longest amount possible. Because, you know, think about it, when you're trading that much of a large capital, we're talking about in the hundreds of millions, if not billions. It's very hard for you to have that sort of mental aspect, in the sense that, okay, I'm able to, you know, get in a position today, get out tomorrow. It's better to just hold it for a long-term perspective, and yeah, understand where the market might go from a yearly basis or even a quarterly basis or something. So there are sort of big people involved in breakout sort of trades like this that get trapped and make stupid mistakes. But anyways, back to the analysis on GBP USD, the monthly time frame. We had this prior engineered high here. Upon that raid, we had that sell-off. Ultimately, you know, to a certain extent, broke market structure. But one thing I'm sort of more focused on is this last down candle before the up move. So yeah, this has basically formed a monthly sponsor candle, and what I'd favor is a pullback within that region. Now, does the pullback happen straight away, or do we get a mitigation of this sponsor candle here? Is another topic in itself. But just looking at sort of current market momentum right now, we have formed a doji candle. So yeah, this could be a illustration of, you know, lower volume on GU. Now we may see a bearish turn of about arguably 500 pips in order to have that massive impulsive move on GBP USD, and this will link in with our dollar bias, as we are expecting a small pullback and then lower prices. So yeah, ultimate area of interest is this last up candle before that bearish impulsive move, and we have no prior mitigation of that candle since. So yeah, that's what I'm seeing on the monthly time frame. On the weekly time frame, something similar, but just a bit more refined. So we find that area of interest there, and if we actually look at this area of interest a bit closer, we did have that raid in price. So we have that prior engineered high here. We same raid that we saw on Euro USD, the daily time frame, I believe, or the 4-hour time frame. But it's that small wick and then an ultimate sell-off. Upon having that sell-off, we have one more raid, and this was basically a massive accumulation to see higher prices on GBP USD from a weekly perspective. But in doing so, we had that move up. We've had a mitigation of that candle, move up, mitigation of that candle. This was the one candle we have not mitigated yet. But in doing so, upon forming that last down candle before that move, we formed very impulsive bullish momentum, as we've created two Marubozu candles that ultimately formed inefficient pricing. We've rebalanced with that inefficient pricing, but failed to mitigate with that candle there. But yeah, upon creating that high, we've created these engineered highs as well, and we've recently seen them swept. So it's a matter of, do we see a reaction of, we have an institutional candle present over here, so do we see a reaction of this level here, a small sell-off maybe, back to this sponsor candle to see higher prices, and then mitigate with that area of interest, and then ultimately come to a deep discount range to then look for you know, that ultimate swing of buys. That's not to say I'm obviously not going to get involved with this. I'm definitely going to get involved with this movement, but it's just figuring out an ultimate illustration on where GU is looking to go next. So yeah, we've just tapped into that range, or haven't really. Yeah, we just tapped into it from the bottom of that wick, that institutional candle. But we do have that sponsor candle, which is considered my area of interest from a weekly perspective at this level here. So maybe a small pullback in order to go higher, and then ultimately come lower into a discount range. Now it's getting into a daily time frame. So daily time frame is actually looking a lot more cleaner. Yeah, this was the one. Is looking a lot more cleaner in the sense we understand structure is bullish as we're making higher highs, higher lows, higher highs, higher lows. But what really confirms a bullish structure to me is when we've mitigated previous sponsor candles and we've reacted off them bullishly. So notice we had this last down candle before that up move. We've had that pullback into that region and ultimately had that bullish pressure. And then again we've had that sell off back to the sponsor candle and then ultimately created that higher high, sell off back into the sponsor candle, sorry, this sponsor candle here, and then ultimately create that higher high, and this basically is considered the whole sponsor candle here, the last down candle before that move. We've had a full mitigation of that candle there, and then ultimately a move higher to the pip, I believe, yep, and then a pullback into that sponsor candle and ultimately seeing a move higher. And since, you know, beginning sort of, well, coming towards the end of January 21st, we've been in this contraction range, just consolidation. So yeah, I do expect a sell-off on GBP USD from a weekly time frame into this daily sponsor candle, and upon getting that sell-off, we'd like to see discontinuation of the bullish structure continue and come to fruition. Mitigation of this candle, the last down candle before the up move, and see price move higher. So yeah, short term bearish on the daily time frame, but overall bullish, sort of looking at with structure, etc. Scaling to the 4-hour time frame. So just looking at the 4-hour time frame, again encountering structure. We are making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Arguably that new higher low over here, and we made a new higher high to the pip, I believe, but I would like to see a much more clearer sort of higher low, and I do feel, you know, we are going to quite correctively have that new higher low. The specific place I like to see this higher low being formed is this 4-hour sponsor candle, the last down candle before that up move that took out these relative equal highs here, and yeah, ultimately form that contraction range. So yeah, upon having that impulsive move, we form that contraction range, and I do believe this contraction here is just literally an accumulation of orders to try and get you know, buyers present, sellers present. We form this engineered prior low here, so it's a question of, is this a you know, raid and liquidity in order to see higher prices, or is this a prior engineer low in order to raid and see lower prices to make that new higher low and mitigate with this sponsor candle and then see higher prices? I do favor the second option, as viewing this as a prior engineered low to sweep liquidity, as there may be a lot of stop losses present below this level here to our area of interest here. So about, you know, all around this region here, 60 pip stop loss. Upon a mitigation, see higher prices. So yeah, I'll be looking to go long, or not really looking to go long. I'll look to see how price reacts at that area of interest, the 4-hour area of interest, and react accordingly. But that's GBP USD. GBP JPY. Start on the weekly time frame with this, just turning off the other annotations. Weekly time frame. Again, we have very nice weekly analysis here. So again, just encountering overall structure. We are making lower lows, lower highs, lower lows, lower highs, lower lows. Arguably that new lower high now. So there's two scenarios in my head now. We ultimately see that next bearish leg to the downside. Now look how impulsive this sort of bearish leg is. Notice this was previously a full body candle, and then obviously we wicked to this sort of hammer doji, but nevertheless, look at this sort of impulsive candle, as we have 1, 2, 3, 4, 5, 6, 7, 8 consecutive bearish Marubozu candles. That basically illustrates that, you know, the momentum is bearish on GBP JPY, and yeah, every time we sort of have a bullish run up, it is quite corrective and choppy in the sense. Yes, we did have a nice bull run over here, but looking at sort of structure from here, we did is similar to GU in the sense that it's very sort of choppy, and yeah, just not the price action you want to see. But nevertheless, I do feel it's coming to an end. We are going to see some we are going to see / witness some impulsive reaction on GBP JPY. So we have come into our weekly sponsor candle, the last up candle before that very bearish impulsive move. We had a mitigation of this sort of institutional candle here, had that sell off, and I think this is our next. Ultimate sell-off that we're going to witness, and where is this sort of sell-off going to lead us to. So I just marked out two different sections here: sponsor candles that have been mitigated and unmitigated sponsor candles. So again, we can see upon that move down, that last candle, the last candle down before that bullish move, and ideally sort of engulf that prior week, or to a certain extent. We're not counting the week, we're only counting the body, so engulf the previous week's body, to say the least, previous candle's body. We did have that mitigation, and then ultimately seen that next bullish impulsive move. And the reason I say it's impulsive is because we have 1, 2, 3 consecutive Marubozu candles, and these two having minimal wicks on each side, and creating that new higher high from this multiplex structure. Now, those of you who don't know what a multiplex structure is, please look at the structure section in the Discord, as I cover exactly what multiplex structure is, how to use structure both on a macro time frame, meaning the bigger time frames, and the micro time frames, meaning the smaller time frames. But yeah, we've had that move up, we've had that pullback, mitigate with that candle again. Not necessarily the biggest impulsive move. It failed to create a higher high, but nevertheless we did have that push up, and we had that candle closure where to this sponsor candle here, the last down candle before that move, and more specifically the body. Ultimately then we have created that new higher high, but in doing so we've left these two unmitigated sponsor candles. So these are two big areas of interest in my head on where GBP JPY could look to possibly retrace to from a shorts perspective, and then it's an argument of, do we retrace here and then ultimately have that bullish run and take out all of these prior highs here, and yeah, basically fly, or do we continue that bearish momentum? So it's one of those scenarios where only time will tell, but I am favoring short on the weekly time frame from a short-term perspective. Scaling onto the daily time frame, again looking at overall structure, higher lows, higher highs, higher lows. Arguably we have that contraction, higher highs. And the reason I say contraction is because it's quite choppy in the sense we're moving sideways. We are gradually making higher highs and higher lows. Looking at momentum from the daily time frame, candles have slowed in volume. So notice how trading at the beginning of December time, we did have quite explosive bullish movements. I'll say explosive, but we're still moving sideways. But for the circumstances it was, considering it's December coming to a new month, we did have these quite strong candle closures on the daily time frame. And again over here we have that bullish Marubozu, arguably. You have quite a strong bullish candle here. So again, we have quite strong price action even from the bearish side as well. And just looking at current price action here, we do have consecutive dojis. Again, one sort of Marubozu candle there, doji, 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 doji. So we just have a line of dojis now, and I do feel this momentum has come to an end. But that's not to say that we can't trade this market. We can definitely take part in this market. We understand there is room from a daily perspective. Now we were refining from the weekly sponsor candle, which was this whole area here, to the daily sponsor candle, which is this last up candle before that down move. And we can see price hasn't really come into that area yet, so there is still a bit of room for the upside, and then we can capitalize on that majorly short position. But yeah, just getting into the 4-hour time frame. So again, overall understanding structure, we are on a bullish trend. For our area of interest here, the last down candle before that move had a mitigation, had that move up, had that mitigation again to the pip, and then ultimately created these relatively equal highs, arguably a triple top, had that small sell off to attract retail to sell upon selling our FOMO, and yeah, selling our FOMO. We did have that impulsive structure that broke quite rapidly, and I do believe we were long around this region here, and I believe it was this region here. But we did catch quite a favourable RR on that. And if you're still holding that, it's probably about 1 to 130, 1 to 140 RR around that region there. But I personally closed my profits as soon as we hit TP. But nevertheless, we do have that last down candle before that up move, creating that new high. So I do expect a higher low to be formed. Higher low to be formed where specifically? At this discount price range, at this last down candle before that up move. So that's something I'm favouring. And yeah, upon forming that new higher low, I would like to see a new higher high, and it just makes sense because upon a mitigation of this last down candle before that up move, it will set as the catalyst towards more bullish momentum on GBP JPY. So yeah, that's basically my bias on GBP JPY. I'll be waiting for price to come into that area of interest there, but yeah, just looking at this, I believe I had a shorter time frame set up on the 15-minute time frame. So yeah, this was something I was just watching, as I don't really trade on Mondays, and I didn't update the group on it because it just didn't feel right. But we did have this last down candle before that up move, and it looks like now we have formed that last point of supply. But we did have this accumulation type 1 schematic, and I was basically waiting for a last point of supply to be formed. But in saying that, we have taken out that test phase there, or create these relative equal lows. So even if this has a bullish run up, it was way too early to be looking for the buys. But that was just sort of like a paper trade, just seeing how Monday sets the scene and then reacting accordingly. But from the hourly time frame, it does look like we have formed relative equal highs. Maybe during Asia we are going to have a retracement back into this inefficient pricing here. Upon that inefficient pricing being formed, being mitigated, we could possibly look for an entry short, and stops just go above that area there. So 6.6 stop for just putting on our 4-hour area of interest. Come to this sort of region here. So it's a 1 to 20 RR, arguably for a 125 pip take profit, which is not bad at all. But yeah, I'll update the group as price action develops. And yeah, just to the pip, we have broken market structure, but what I'd always like to see is a body closure, which we have if we actually mark out sort of from this level here to this level here. So we have had that body closure. Now it just could be waiting for a retracement to catch that short, to then go long to ultimately catch the short. But yeah, that's GBP JPY. AUD USD, again a pair I was watching today, and I believe someone was looking to go long. I can't remember where it was, but there is a favorable long opportunity. But yeah, let me just start from the weekly time frame just to give you, or the monthly. Start from the monthly. So again, looking at this from the monthly perspective, we do have this monthly stop loss hunt, as this was present on GBP USD and I believe Euro USD as well. So we do have that monthly stop loss hunt that took out this prior engineered low, and just think about how long ago this low was set. So this low was set in stone on the 1st of October 2008. So it just basically shows that these concepts have been about, arguably forever. It's just that, in this modern day now, they're slowly coming together, and people are starting to take notice of it. But these smart money concepts and stuff, they've been about for not been about, but they've been in play arguably since the markets have had its earliest days. But nevertheless, we had that stop loss hunt. We did create this last down candle before the up move, and more specifically we're looking at the body. So if we recorded GBP USD example on the daily time frame, we do have that similar sort of candle structure in the sense that we do have that body and that wick, but we notice the body only gets mitigated, and I'll basically highlight the mean threshold of this sort of candle. So I do think we are going to get a pullback within this region here on AUD USD, and then ultimately see higher prices. But in the way of that is this monthly institutional candle as well, the last up candle before that very bearish impulsive move that took out this sell side liquidity slash prior engineered low, this monthly low over here. So again, those are two areas of interest I'm monitoring. But if we look at structure as well, we are making higher highs, higher lows, higher highs. So we just got to be wary of that new higher low, as it could actually be a break in market structure, and then we could see a small pullback and then ultimately a sell-off. And so if we look at overall structure now, we are making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and arguably could be making a new lower low. But I've laid out the premium and discount region as well, so we are in extreme premium right now from this high to this low. So yeah, it'd be a bit dumb from the bank's perspective to be buying quite a lot of AUD/USD right now when they could sort of short it, mitigate with a candle there, and get the best price possible, and then look to see higher prices on AUD/USD. Targets this last up candle before that very bearish impulsive move, but a target more favorable than that is arguably this candle here, and that in itself, just from this level here to this level, is a 4,000 pip move. Now that's not really arguably, to some it could sound like a ridiculous target, but if you actually just look at price action here, it's the same as if you're looking on the hourly time frame, but we're just monitoring it from the monthly perspective. This is how we can capitalize on them, very high risk to rewards. Is you look at the monthly, you understand the bias. Okay, there's a major swing, that could occur in the near future. Okay, I'll be wary for bulls, and then as soon as it reaches this area of interest, we use this same analogy, use the same analysis to direct us on the arguably 5-minute and 1-minute time frames and give us that precise entry. I'm also going to be bringing out entry models, so how to basically capitalize on a lower time frame, etc. So I'll be doing more videos on that, but just a brief explanation on how to basically look at monthly and the 3 and 4 minutes, or even 1 minutes. Some people even go down to the 30 seconds and 15 seconds, but regardless, price just does the same thing. It's just price is doing a lot more on the minute time frames, because there's a lot more candles and a lot more noise there, but nevertheless, this is the last up candle before that down move, created inefficient pricing, have these relative equal highs here, have relative equal highs there, have this inefficient pricing here, and so this is my ultimate target. We could actually reach that level and then ultimately have that sell-off, but same thing present from GBP JPY's perspective. From the weekly perspective, we haven't really reached that area of interest yet, and same on AUD/USD, we haven't actually reached that monthly SC, that monthly sponsor candle. So maybe we're gonna have one more push up and then ultimately sell off, and then ultimately have that buy. Just getting into the weekly time frame. So again, just refining my sort of viewpoint. We do have this weekly sponsor candle here that took out these prior engineered highs here, relative equal highs here, inefficient pricing here. In addition to that, we do have that imbalance there, again relative equal highs here, but notice we liquidated all of these lows here, and obviously this prior engineered low here. So I feel a lot of liquidity has been gained just from this sell-off here, in order to see, and it could be the catalyst towards higher prices on AUD/USD. So I like to see a pullback within this weekly range. So again, we're trading from this high here to this low. I'd like to see a pullback, as this is the most relevant candle, as there is no other bearish candle to a certain extent that's in a discount pricing, as this light blue area is the premium pricing and this dark blue sort of area is the discount pricing. So I'd like to see AUD/USD have a sell off back to discount pricing, come to this weekly sponsor candle, then ultimately look for longs specifically, where to this last up candle before that very bearish impulsive move, there's not been no mitigation of that candle ever since. But Yeah, that's what I'm favoring on the weekly time frame. Scaling into the 4-hour time frame, daily time frame. So again, similar thing we're seeing on the weekly time frame, in the sense I am expecting a sell-off back to a discount pricing, and ultimately look for a candle closure within this region to go long, or we have this inefficient pricing here, as there is a gap between this. There's no prior price action towards the left or right, which basically means it is imbalanced price range, and I'll basically be looking to see how price reacts on the mean threshold of this, as sometimes price can just react off the mean threshold of these inefficient pricing, and then we see a reaction in our favored bias. But yeah, if we do rebalance our whole pricing and that whole imbalanced price range, that's fine as well, and I'll react accordingly. But yeah, this is an area of interest of mine, this weekly imbalance. Also, this last down candle before that move, yes, we had that mitigation, but it looks like we're coming into it for one more mitigation. Maybe we could see a small push up, and then ultimately look to capitalize on a shorts back into this discount price range. We are in right now, close to equilibrium, so yeah, maybe just a small retracement up, very small, and then ultimately look for a sell-off. Scaling into the 4-hour time frame now. So again, these are my two biases. I expect price to react of this level here, this last down candle before that I'll move, but I refined it. I believe it's on the 30-minute time frame. I know that was another entry we caught, but yeah, it's basically been refined. To this block here. So this last down candle before that I'll move, but I've encountered these 3 consecutive candles as well, as these 3 candles together are still considered as one sponsor candle. So yeah, I've encountered those within the bias, but it's price one. Here it is. But yeah, just looking at overall market structure, we are making higher highs, higher lows, higher highs. Ultimately had that breaking market structure. Lower high, lower low, lower high, lower low, lower high, lower low. Well, not really a lower low, but relative equal lows there, but sort of looking at substructure, in the sense structure inside of a structure. Lower low, lower high, lower low, arguably that new lower high. Ultimately creating that new lower low of this overall structure, lower high. And it looks like we are going to create a new lower low now. So yeah, within this region here, there hasn't been any significant break in market structure. We've had relative equal highs here, but yeah, there's not been a clean break in market structure yet. I would see how price reacts to this level here, and even to a certain extent, this level here is risky, as yeah, it is. We haven't broken market structure yet. Let's say we just get a sell-off from this price point here, straight sell-off. In order for me to feel comfortable it's gone into a bull market now, and I would need to see a bullish body closure below this prior high here. Above this engineered high here. So yeah, that's my bias on AUD/USD. But nevertheless, as it comes to this area, I will go into the 5-minute time frames, even 3 minutes and possibly 1 minute, to look for either accumulation schematic, one of my entry patterns to form, and then react accordingly. And then on the hourly time frame, I do believe there were old markings, but just looking at the hourly time frame, yeah, and just put it in alignment with the 4-hour time frame. Just a more refined viewpoint on the areas of interest. So again, we have that 1-hour area of interest there. We have that 1-hour area of interest there. So 2 possible price points price could react off, but I am favoring this area of interest more so on the hourly time frame, this one here, because we do have inefficient pricing. We do have the relative equal highs here that need to be swept, and overall structure is in a sort of bearish trend. And if we were to come all the way up here, we could arguably, break market structure, and it will change the whole sentiment of this bias. I do feel the business up here has been dealt with, in the sense that we've swept liquidity, we've had that break in market structure, we've had that mitigation, and seen lower prices ever since. But I do feel this area here still needs mitigating with. So yeah, that's AUD USD, USD JPY. Just quickly scale into a monthly time frame. So again, monthly time frame, quite interesting. We did have that sweep of sell side liquidity. Upon having that sweep, we had that push up, mitigated with that candle there, and basically formed my monthly area of interest. So this is my main area of interest. I want to see price ideally come to this area here, you know, regardless of when that be. That could even take place in 2023, but this is my monthly area of interest, right? Just like I have a 4 hour, just like I have a 1 hour, the area of interest is basically a region that I'm going to look at in order for me to take explosive price movements. So yeah, that could be in any bias, but this is one of my monthly areas of interest. The reason is because we do have this inefficient price in here, so I believe all this price needs to be rebalanced with, and ultimately upon rebalancing with that price, we are going to get a mitigation of this last down candle before the up move, as this was a huge move from a monthly perspective, and the catalyst towards that was these engineered sort of lows here. And again, we have that shift in market momentum as we failed to create that new lower low. Upon doing so, we've created relative equal highs up here, so we could be looking at two very explosive moves, maybe a sell off here to take out them highs there on USD JPY. But yeah, just getting into a bit more current price action on the monthly time frame. We did have this relative equal lows here being swept. Upon sweeping, it will use that liquidity to then see higher prices on USD JPY, filling this inefficient pricing here and this small gap present here. Just failed to come and mitigate with that candle there, but arguably from the wick perspective, there is some sort of mitigation. Then had that sell off, created relative equal highs again, created relative equal lows. Equal lows have now been swept, and I basically like to see a push up from a monthly perspective in order to take out them relative equal highs, mitigate with this candle here, possibly to the wick, and then ultimately have that sell off to our monthly area of interest. Scaling into the weekly time frame, again looking at market structure, we are in a bearish trend. Lower lows, lower highs, lower lows, lower highs, lower low, lower high. And now what I would like to see is a push up towards our weekly area of interest here. And this is the last up candle before that very bearish, not impulsive move, as we've consecutively made dojis on the weekly time frame. So I do expect, you know, when the movement occurs, quite an impulsive movement on USD JPY, regardless if that is bullish or bullish or bearish. But my overall bias right now is bullish, short-term bullish on the weekly time frame, overall bearish on the weekly time frame, short-term bullish towards this premium pricing here, mitigation of that sponsor candle there, then an ultimate sell-off to take out this prior engineered low here, as we did on the monthly time frame, from this prior low here that swept. So I want to see something similar like that. Upon sweeping that, maybe a push up or retracement, or we just see what happens then. So now looking at the daily time frame. So I believe these were the daily. Just give me 2 seconds. So yeah, looking at the structure on the daily time frame, we were making lower lows, lower highs, lower lows, lower highs, lower low. That raided this prior lower high, but failed to mitigate with this sort of imbalanced price range here. But we have had that, to a certain extent, candle mitigation there. But I like to see a bit more of a lower mitigation within this area here. In addition to that, We are creating higher highs, higher lows, higher highs now. So I do expect a higher low to be formed in order for us to see that new higher high. My first area of interest was here, and it unfortunately didn't get met. But upon forming that new higher low and that new higher high, this is my next area of interest. Is last down candle before that move. We have created imbalanced price range from a daily time frame that needs to be mitigated with. So yeah, that's an area of interest of mine on the daily time frame for longs on USD JPY. For possible shorts, we could come into this area here as we swept these relative equal highs over here, broken market structure impulsively. So upon coming into that area of interest there, I'll be looking for shorts and seeing how price reacts there and take my entry accordingly. And again, 4 hour time frame. So that was previous analysis, but just looking at sort of structure here, it is quite bullish. Higher highs, higher lows, higher highs, higher lows. So I'm not really trying to call it a top in this market. But if I was to look for a sell-off, it would be at this region here. Just a more refined point of my daily area of interest. So we still have a bit more room to the upside. So we could possibly look at this candle here as a sponsor candle, as we did form inefficient pricing there from a 4 hour perspective. Wait for a possible pullback and then look to go long from there. Next on my list is USD CAD. Start on the weekly time frame, or start on the monthly actually. So yeah, just starting on a monthly time frame gives us an overview on sort of where price is. So yeah, I've basically got a very strong bias going into 2025 with this, but but yeah, just looking at sort of price action over here, had that accumulation schematic, had that move up, small pullback, arguably to rebalance with this inefficient price in here. Saw higher prices ever since, formed this massive imbalanced price in here, relative equal lows there. In doing so, in this whole sort of move up, yeah, we didn't actually mitigate with anything up there, but it looks like we've rebalanced with inefficient pricing over there. Had that sell off, but created these engineered highs here that I basically use as liquidity sort of regions there. Yeah, and then basically form this sponsor candle, the last down candle before the up move. Upon forming that, upon having that bullish correction, we've had that next last down candle before the up move, and yeah, notice how price has basically run through this last down candle before the up move. Whenever price runs through a sponsor candle like that, it basically suggests that this is now an institutional candle. So yeah, whenever price runs through a sponsor candle, it becomes an institutional candle. Now what I'm waiting for is, again, this is the premium side and this is the discount. I'm waiting for USD CAD to come into a premium zone from a monthly perspective, but how it's basically going to get there, I'll basically wait for a pullback and mitigation of that sponsor candle there, the last up candle before the down move that broke market structure, and a mitigation of this institutional candle. So again, there's two very strong confluences within that region there. If we actually look at the candles a bit more in depth, we can see this inefficient price in here. So yeah, that's another thing to keep an eye on. That's three big confluences there. Upon reaching that level, I'd like to see an ultimate sell-off to this last down candle before the up move, to give us that mitigation that we need. Upon that mitigation, I would like to see a bullish rally to our monthly area of interest, which is this last, I believe that's the weekly area of interest. Yeah, that's the weekly area of interest. But nevertheless, the weekly area of interest, upon mitigating with that sponsor candle, I want to see an ultimate sell-off, clear out these relative equal lows, rebalance with price here, and come to this last down candle before the up move. Upon mitigating with that, I would like to see a massive bullish run on USD CAD to take out this prior highs here and ultimately come and rebalance with this inefficient pricing that was left and mitigate with that candle there. So yeah, on the monthly perspective, things do look good. Scaling into the weekly, time frame, we do have this contraction range here as well as just a huge amount of accumulation of orders, and we're seeing the same thing present. I believe it was just a currency pair I talked about. No, it was GBP USD. So we're seeing the same thing present on GBP USD, and yeah, we had that prior high swept, and arguably now that prior low swept. So yeah, I do expect some higher prices on USD CAD, but in doing so, there's a couple of things I want to see as confirmation. I want to see this high be impulsively broken through and have a full body closure above that high to indicate a break in market structure, to basically show me that there's been a shift in market momentum. Upon doing so, we do have a weekly area of interest that price could react to, so we could possibly see something like this, a break of that high there, come into that weekly area of interest, have that small retracement, and possibly look to go long there and hold our position. And yeah, let's remove this one. So yeah, this is our weekly area of interest here into a premium. So this is basically where I'll be targeting, but yeah, it's a good example on how we go from that contraction phase to expansion, ultimately sell off, to take out both sides of the market, and we formed our range here. So there's the two sort of areas of interest. This is definitely my favorite one, my favorite sort of bias, and if this low holds and we don't raid through that, then I'm definitely looking for higher prices on USD and CAD from the bigger time frame perspective. Daily time frame, again, just looking at sort of what's happening here. We had these relative equal lows here. We had that stop loss hunt. Since that stop loss hunt, we've had that break in market structure that took out this prior engineered high here. But just before doing that, we did have that small pullback, and it wasn't necessarily a mitigation of that, but we did create this inefficient pricing here. So I'm waiting upon a rebalance of that inefficient pricing and arguably a mitigation of this candle here. But just looking at sort of target wise, we do have this last up candle before that down move in the daily time frame. We do have these relative equal highs here that need to be swept / used as liquidity, and yeah, we have reacted off this sort of zone here, made that new lower low, and now it looks like we are in that sort of accumulation phase. From the daily perspective, scaling to the 4-hour time frame, a bit more in-depth analysis, but yeah, just looking at the 4-hour time frame, we are in this accumulation schematic. So again, I think I labeled the PSY, which is meant to be here, but again we have the SC, AR, ST, we have that raid, and then we have that STB spring, so 3 drives to the low, arguably broke market structure, but in breaking the low, we do have these relative equal lows here. Inefficient pricing, we do have this sponsor candle present over here, so that's something I'm monitoring, and that is a 10 pip stop for a 360 pip take profit. But if we put this in perspective of our daily area of interest, you know, we could scale this to that's a 1 to 89, and again, we're just taking the sponsor candle on the 4-hour time frame. Normally, if I was to take a sponsor candle on a 5-minute time frame, 2 to 3 pip stop normally, but yeah, this is just being safe. That's a 1 to 89, and then if we look at from a weekly perspective, our area of interest, see, we've just reached equilibrium on the weekly perspective. And just turn off the, actually, anyway, let me lock this. It's locked. So again, that is a 1 to 37, and you can just see as we've moved higher and higher the time frames, how the risk to reward just becomes that much better and better. So yeah, looking at the overall bigger time frames is definitely underrated, but it basically gives us an overall bias on where price is next likely to go next. So that's what I'm favouring on USD CAD, a small pullback to mitigate with that candle there, take up them relative equal lows, and yeah, see if price is higher. Do we have CAD news? Yeah, so we do have CAD news on Friday. So Friday will be an interesting day for USD CAD. Yeah, obviously it's non-farm payroll. NFP I don't normally trade, but since there is a favourable opportunity on USD CAD, I might take a trade with a small risk, a very small percentage risk, but yeah, that's something to keep into consideration. NZD USD pair I've been sort of monitoring for a couple of weeks now. We did take an entry upon here, nearly got stopped at break even, just missed it by a pip, but yeah, that's the result when you hit snipers. You can sort of save your trade, but yeah, that was a 7.5 pip stop for arguably I'm heading for a 200 pip take profit, which is 1 to 20 in itself, 20% gain. But in saying that, it's been very choppy, just been up and down, creating relative equal highs, relative equal lows, a raid, sell off, upon selling off, mitigated with that area of interest, a 4 hour area of interest, had that push out, push off, and yeah, I'm basically favouring a pullback into this next area of interest, the last down candle before that I'll move to arguably broke market structure and these relative equal highs here. In doing so, having that small pullback, I want to see higher prices and yeah, arguably a sell-off to this the mean threshold of this imbalance pricing. In addition to that, we do have these relative equal lows present. So yeah, there's a couple things I'm factoring on NZD USD, but my main area of interest for the bullish trade is this last down candle before that I'll move that sponsor candle, and for the bearish trade, it is this last up candle before that very bearish impulsive move that has relative equal highs above it. So upon sweeping that liquidity, I would like to see a sell-off in that region, and then yeah, look for lower prices on NZD USD upon reaching this range here. This is not sort of a pair I'm looking at, just sort of an example or showing someone. Gold is the next one on the list. Actually, let's do EuroCAD first. So EuroCAD's quite an interesting one. If I just sort of spring onto the weekly time frame, I haven't really organized it to a certain extent as I was just overlooking this one. But yeah, if we look at sort of EuroCAD and how it's reacted, we swept that low cleanly, had that doji candle, very rapid impulsive move, create that inefficient pricing, them two bullish candles there, and arguably that volume imbalance inside there, had them relative equal lows that need to be swept from a weekly perspective, relative equal highs that need to be swept from a weekly perspective, and it's come into our weekly area of interest, and in doing so we swept a prior engineered low. So upon a mitigation, we swept and gained liquidity. Upon gaining that liquidity, we've seen that bullish reaction. So I do think there's a favourable opportunity on EuroCAD getting into the daily time frame. Again, creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Arguably had that break in market structure upon retail thinking this is going to go higher. Had that sell off, take out all of them stop losses there, and mitigating with a sponsor candle over here, this last down candle before that up move. Had that break in market structure, and now I am favouring possible pullbacks on a 4 hour time frame, more specifically within this inefficient pricing here. Or arguably take out this relative equal low here. So this is something I'm monitoring on EuroCAD. Relative equal lows there. We do have the sponsor candle here, which we could move our entry here. So yeah, this is more so an area of interest than where I'll put my limit. But yeah, it's just a matter of seeing how price reacts and just being patient, because at the end of the day, we know these setups can pay over 20, 30, 40, 50%. That's a tremendous amount, you know. So just being patient when the market, letting the market come to you when it's necessary, and reacting accordingly. It looks like we are making higher highs, higher lows, higher highs, or we can have that one more higher low in order to form that new higher high. And last but not least, gold. So gold is an interesting one. We have formed an full accumulation schematic on the 4 hour time frame. We have that first raid, second raid, arguably the third raid of the highs, ultimately sold off to create that last point of supply, and yeah, now I'm favoring a possible pullback within this range here. Just getting onto the 15-minute time frame, I believe it was that range, yeah. So this last down candle before the up move, favoring a possible pullback, but more specifically sort of mean threshold of that level there, and look to go long from there on gold. Obviously refine my stops as price comes to my area of interest, but the next target for me on gold is on the 4-hour time frame. I'd like to see it come to that sponsor candle there. There is no mitigation of the sponsor candle. Upon mitigating with that 4-hour of interest there, we haven't had a proper mitigation, so that's something I'm looking at on gold. Arguably that is I believe that's a 1,000 pip move, so yeah, very favorable move there for our area of interest there. And look at this inefficient price in here, all inefficient here, all inefficient there. Arguably we have rebalanced here to a certain extent, but there's a lot of inefficient pricing that needs to be rebalanced with. So yeah, upon getting that entry there, I am looking for longs, and then from there, I know there's someone in the group that follows gold very heavily. Upon there, I do think we are going to see that major sell-off, taking out this low here, because if we actually look at structure overall, lower low, lower high, lower low, lower high, lower low, sorry, lower high, lower low, lower high, and arguably that new lower low possibly to this sort of region here, and then that's when the real bull trend will occur, and then we'll see that gold take out all-time highs, etc. So yeah, got a long way till then, but nevertheless we can capitalize on these very favorable opportunities. That's it for the market outlook. I hope you enjoyed that. Once again, if you do have any questions, both to existing members and new members, please feel free to message me. We'll go through a couple things, but yeah, on that note, I hope you all have a good night, and yeah, keep studying, stay safe, and I'll speak to you tomorrow in the Technical Tuesdays.